Thank you all for joining the session. If you are here, let's wait for a couple more minutes as we wait for everyone else who turn up. Those of you who have joined us early, welcome, and thanks for turning up early. Give it a couple of minutes before we'll get started. Today we are going through the top trend indicators. So indicators is a good way to tell you where the market is heading. So, if you struggle to try and find out how to look at the markets and where it's heading, you need some indicators to guide you on that. That's what we'll be going through today. One more minute and we'll start. Let's see. Quite a good topic, quite an important topic today as well. So if you're joining us, or if you're watching this on YouTube as it's being recorded and uploaded later onto YouTube, if you are watching us on YouTube, well, I hope you enjoy the topic. And if you have any questions, send it in, put it in the comments. I'm sure someone will get back to you on those questions and answers for those questions as well. All right, let's get started. Again, thank you all for attending this session. We are going through the top trend indicators here with Vantage. My name is Jin Dao. Everyone calls me Jin. It is the 19th of July, Tuesday at 5 p.m. GMT +8. Let's get started. All right. So top trend indicators, what it tells you is what we're going through is to tell you tools that you can use on the charts to tell you where the markets are heading, the direction it's heading, and the possible strength or a possible correction of the trend. With that, as usual, before any webinar or before the start of any webinar, what we do is to run through a quick disclaimer just to make sure you know that any information shared in this webinar is purely the views and opinions of the presenter, myself, and the following slides are and should be used for educational purposes only. They do not constitute investment advice or how a client should trade. So in essence, what you should be doing is your due diligence before you jump into any trades, or if you use any of this information, make sure you go through your due diligence, make sure it's suitable to how you trade before you start deploying on your trade analysis or your strategy. If I have the time, I will be looking at some charts, looking at some live charts, getting some possible trade setups as well. If you do jump onto those trade setups, please make sure you consider your risk, your trade size, your risk profile, your style of trading, and whether you want to jump into that trade on your own as well. So do your due diligence. I cannot be responsible for any profits, any loss of profits, or potential loss of capital as well, right? With that disclaimer done, introducing your team of analysts here with the Everest Fortune Group. We have Desmond, who usually does this session, but it's not too up to the weather today, so I'm jumping in. My name is Jin, as I just told you at the start of this session. I'm one of the prop traders here, and I'll be guiding you through how to use the top trend indicators, how I use them, and a bit about, if you have any questions, how I trade or how I approach the markets, please feel free to put them into the chat. I'll be happy to help you through that, answer any questions you have, and also to guide you through your trading journey. Right. Now, for today, what are we looking towards? The agenda for today, or what you can expect. First off, we'll get into a quick introduction of trend indicators. There are several trend indicators that you can use. What we have done is to filter down, right? Don't get over confused. There are too many out there. If you put in every indicator, what's going to happen is you're going to get lost. You can get the whole, what they call analysis paralysis. You don't know what to look at. You can't figure it out. The chart becomes too messy. We're going to do a quick introduction, and I'm going to list out the top 5 most effective trend indicators. Why is it effective? it tells you clearly where it's heading and potentially where it could go with that trend. And then it's not just enough to know what the indicators are, how it looks like, how you could use it. You want to put it together with a trading strategy, right? You want to put it together so that you know how to implement it, not just learn about it, but you also want to be able to implement it so that you can take advantage of the possibilities in the FX market, or in most financial markets. You can apply these indicators to help with your overall trades. Again, if you are joining us on the live session right now, if you have any questions, please feel free to put them into the chat. At any point in time, I will be looking at the chat. I'll be answering your questions there. Or if you are joining us on any other platforms, put it into the chat as well. We do have it. We are able to see all the comments on the other platforms as well. So let's get to it. First up, the Ichimoku Cloud. The Ichimoku Cloud generally tells you the trend in a broad base. And what we've actually done is we've filtered it down. We've simplified it. Ichimoku Cloud typically comes with many other lines. It comes with, the cloud. You can see here, I'll show you. The cloud here with that red cloud towards the downside, telling you that, hey, price is moving lower. The green cloud pushing upwards acts as a bit of a support to show you that price is pushing towards the upside. What we've done is we've taken out a lot of the other moving average lines. We've taken out all the other components just to simplify it, because this is the two things that you need to focus on. Is price above or beyond, or no, above or below the cloud? Is the cloud red or green, right? Simplify it down to the bare basics, two things that you need to focus on. Whether it's red, you can see here. And if price is below that red cloud, you can see that it's forming, or it's in that downtrend. It acts as a resistance. So you see that price would struggle to break above that cloud. But once it comes into that red cloud, you can see at the bottom of this chart here, as it comes in, the price movement becomes very choppy. It moves in all different directions. It shoots up, tries to break above, but still the red cloud. So it still shows you that downtrend is still valid. It shoots back down again, and then it tests within this area before it breaks out of that red area and it turns green. The cloud turns green, and you see price now above that green cloud, signaling a potential, or signaling that upward direction for price to move towards. And that's how we use a quick, simple explanation of how we use the Ichimoku Cloud. With that as well, what you have to pay attention is that as price comes close to that cloud, you can see that the strength of that downward move here becomes a lot weaker. It becomes so weak that it's almost like an upward move before it sits across and changes the direction. So what you want to do is pay attention to the distance of how price is from the cloud. If it's far, shows greater strength. When it comes close or comes inside of the cloud, you're going to see that it's starting to form or starting to change the direction towards the upside or the downside if it comes into that green cloud. What I would do on the Ichimoku Cloud, or in most of these indicators, is to tell you that you should be using it possibly on the H1, H4, or the daily time frame, depending on your trading experience, whether you are new, whether you're newbie, you're new to this, whether you're intermediate or advanced. I would say that indicators works best on the larger time frame. On anything less than a 1 hour time frame, what's going to happen is that you're going to see price change or break in and out of those clouds or the other indicators quickly. It becomes very noisy. You see price moving all around. The signal becomes very mixed. So to just keep it simple for yourself, and most of you I see here are probably, and I recognize some names here, most of you are probably retail traders. You don't have that much time to sit there to trade. You're not going to be looking at the markets every day, possibly. You're looking at the markets after work. keep it simple, keep it onto the H1 or H4 time frame. Check in, check out a chart. If it makes sense, if it follows your rules, then get into the trade. If not, look at something else or shut it down and not trade for today, right? For the day. So make sure that you look at your indicators on the H1, H4 or daily time frame. If you really have to, on the smaller time frame, just be aware that it's going to be noisy, it's going to be choppy, it's going to likely send you a couple of mixed signals before you identify that overall downward trend or upward trend. So that's the Ichimoku Cloud. The next one we look at is the golden, right? The golden or the death cross. So what's the golden or the death cross? Basically, it is the 200 moving average and the 50 moving average, right? The 200 and the 50 moving average. If the 50 crosses over the 200, we're going to see that as a death cross towards the downside. We're going to see price push towards the downside. And when we see price or the MA50 cross above the MA200, we're going to see that as the golden cross with price pushing towards the upside. Bear with me, I am coughing a little bit today, so if I do pause a while just to cough, just take a break there. Will this be recorded and can it be watched later? Yes, for sure, Dennis. This is recorded. It will be uploaded onto YouTube and possibly a few other platforms as well. So, you know, thanks for joining. If you have to drop out in the middle of this, you will be missing out, but you can check back later to catch the videos later again. And also, I would say that for everyone else who is watching, if you have any doubts about what you catch during the session, do watch this over and over again, because it doesn't hurt to get more information, and you never know what you catch if you just watch this a couple more times. There might be little nuggets that you'll find out that you've missed out, and then that might be that change towards helping you trade more profitably. So again, back to it, the death cross here, 50 MA crossing down from the 200 MA. We can see that as a death cross pushing towards the downside. You can see price sitting pretty much right across before the 50 crosses above the 200 to push up. We call that both the golden and the death cross. While we use the moving averages to tell us, the crossovers, the golden or the death cross, what you can also pay attention to is when price or what we call the candlestick crosses over a moving average, right? Crosses over a moving average. So what we have here, you can see the price now crossing over. This is a 200 MA pushing towards the upside. Once price crosses, it forms, this moving average here forms a bit of a support. It forms a bit of a support. You can see that if you bought there, pushes up, it tests, fails to break below this moving average, forms a support, tests again higher, tries to break lower, fails to break lower, and it keeps pushing up. You can see that it sits right above that moving average. So as price crosses above the moving average, that again shows you an indication. It provides a signal that price has completed its downward move, or it's completing its downward move to push towards the upside. So that gives you the indication that, hey, it looks like it's pushing up, it's moving, trend is changing to push towards the upside. Again, if you have any questions, please feel free to put it into the chat. I'll be more than happy to repeat any points if you need, or to elaborate further. What you're going to notice here is that you can see here, as we look to buy, once price has crossed over a test of that support of that moving average there, shows that the overall trend is towards the upside as price crosses above moving average. I like the channels, right? So the most straightforward thing that you can use to tell you where markets are heading in an overall direction is to use channels. And what are channels? Channels are really that two diagonal lines. There are two diagonal lines, and you can see that once you see the two diagonal lines pointing, in this case, towards the upside, pardon me. In this case, you can see price, well, the two channels pointing towards the upside, diagonally towards the upside. It shows you quite straightforward that price or the trend is moving up. And also the channels forms that resistance and support levels, the diagonals, resistance and support levels that can be useful to your trades. What I mean by that is that you can see once price comes down, hits that support or that diagonal support level, the channel, it bounces towards the upside, hits that top channel, turns back down briefly, hits that top channel again, turns back down towards support area, that area of that channel, before pushing up again, right? Before hitting that support level and pushing up again. At this point as well, what I'll show you, or what you should notice, is that with the upward trend, in this case, an upward trend, you can see that downward moves or counter trend moves are usually quite short, right? Are quite short. We've seen big, strong upward moves, short downward moves. We've seen upward moves. This, in this case, came down to test. We've seen that test up and then a big, strong upward move again. So again, I would say that if you are new to trading or relatively new to trading, what you should be looking for is trending trades. Look for those trending trades. I know that counter trend trades are possibly more exciting because you're looking to trade on the reversal. The risk to reward potential is possibly going to be quite high, but what you want to do is also understand that about 70% of counter trend trades fail. About 70% of counter trend trades fail. What you should be looking for is trend following trades to start off with. As you build that experience, as you build the profits, then you can consider into short-term counter trend trades or setting up for that counter trend trades. So the channels here are very useful to show you clearly where markets are heading, in this case towards the upside, but it also shows you that diagonal resistance and support level, just to let you know prices are not going to keep climbing up. It's going to hit a level, turn back down, or hit a level and turn towards the upside. Now, here's a quick question for everyone. As we looked at price breaking a moving average, right? As price breaking a moving average, and how I mentioned to you that price trades above a moving average as a good support level. What do you think between option number one or chart number one and chart number two? Which is, or which looks better? Which looks better? That price has tested that level, bounced at the MA on several occasions to show you an upward trend, or for price to, well, test, slightly miss in this case, slightly miss in this case, again and again, slightly missing. Which would be better, for price to actually hit and bounce off a moving average, or for price to hit, or to price to actually miss a moving average, to trade above that moving average? All right. I see some answers there, so good stuff. A lot of you giving, well, I see some mixed answers here between chart number one and two. What I would say is that you want to consider it as, you know, everyone knows the simple moving average, everyone knows the exponential moving average. What I want you to consider in this case is the natural moving average, the natural moving average. And what that means is, oops, when you see this, in this case, this is the 50 SMA, and this is the 40 46 SMA. Right? So commonly everyone knows that, or everyone is used to inputting a 50 MA or 50 SMA, 200 SMA, 100 SMA. What we have found is that when we tweak the periods counted on a moving average, in this case, we've tweaked it to a 46 period simple moving average. We found that price has actually hit that support level, hit that moving average as support level before bouncing back up. This is what we call the natural moving average. One consideration why we've done that is because 50 is just a round number. It's just an easy round number for everyone to use, to remember. One reason why it could be a 46 SMA is as we tweak it, we start considering the possible trading days within the period. So it's not always a 50 trading day to set up the 3-month period or the 2-month period. 46 SMA could set up that period more accurately. That's why we consider the natural moving average, and we see that price hits that support, the MA as a support level to push towards the upside. Okay. In that case, as we move on from the natural moving average, and remember in this case, we want to be looking at price hitting and bouncing off the MA being stronger than price, just missing the MA. What I want you to consider is the double break. The more times we have a confluence or multiple tools or price breaking or supported by multiple tools, the better or the stronger the result is likely to be, right? So what we have here in this case, looking at the one on the left first, we have that upward channel. And we have the 46 SMA here. And in this case, you can see that the price has actually done quite well. It's been supported by that support level here on the channel, the lower end of the channel, resisted by the upper end of the channel, and again, supported in this case by both the 46 SMA. So what we have here is a channel. Pardon my scribble. And also the 46 SMA. Right? So in this case, we have it being supported at this point. We see it reject that resistance level of the channel. Again, supported by both the channel and the SMA. And again here, and again here, right? So what would we expect when we see price, now to the chart on the right side, what would we expect when we see price break, right? Price break below both the channel, the lower end of the channel, and also the 46 SMA. What would we expect when we see price break below that lower that lower end of the channel and the 46 SMA? Is it going to be a strong move or a weak move towards the downside, or are we likely to see this bounce back up? As I've been telling you, what we see is that with price, and if the candlesticks breaks above, in this case a double break, it breaks above two indicators or two trend indicators, the channel and the 46 SMA, it usually leads to a strong move either towards the downside in this case, or if it breaks above, or if it trends down and breaks above a resistance and it moves strongly towards the upside. But whenever we see a strong break, a double break of the channel and the SMA, or of the Ichimoku Cloud with an SMA, we're going to see a strong move result from that. All right, so these are things that you want to look out for. You want to see price come down. Don't anticipate. So I'll come back to the previous one. I wouldn't anticipate in this case for price to break. Right? I wouldn't be looking to sell there. I wouldn't be looking to sell there. or in any of these situations here, I wouldn't be looking to sell. What I want to see is I want to see price break below, clearly break below, and also for the candle to close below that channel, and close below the 46 SMA before I will consider it as a potential selling signal. Be patient, don't rush into the trade. Wait for the price to close below those two indicators before considering that selling opportunity. And what you get is that big downward move, rather than if you anticipated it, you see the big reversal. If you're looking for, if you're trying to anticipate the break, you see a reversal, but look for it to break below. You could be looking to sell there. Stop loss just into above that SMA, above that channel resistance. Now you could be looking at a very good risk to reward trade towards the downside there, especially on a double break scenario. With that, all right, not just a double break, what you're going to consider is also a confluence. What's a confluence? It's when you have multiple tools or multiple indicators working towards or working together to give you a good, strong signal. So in this case, you see we have one indicator here. That's just the channel. Right? Just one indicator showing you the channel. Great. You gain some confidence as you see it move towards the upside. You see that channel pointing higher. You know that it's moving strongly up. In this, on the right side here, we have the channel and also the SMA, the 46 SMA, right? So you can see that as we were just describing on the double break, that SMA now forming an additional support level to give you that confidence, to show you that strength of that upward move. And you can see that it forms that confluence, right? Confluence is that combination of tools and also the confidence, to give you that confidence of the trend analysis or the trade analysis, the strategy analysis. Adding in one more will be the Ichimoku Cloud, right? In this case, you can see it's a green. You can see it's a green Ichimoku Cloud, and you can see that price stays above that green Ichimoku Cloud towards the upside, right? Again, showing you multiple tools or multiple indicators telling you the same thing, that, hey, price is pushing up, price is going higher. And then this is the Ichimoku. Oops. Oh, I'm not going to try Ichimoku, right? And then here we also have the 50 MA showing you that crossover there, right? You can see that the 50 MA crosses over from the 200 MA. Again, that's that golden cross. But what you want to pay attention to here, and what I was, when you start considering the moving average cross, is that moving average is a slightly lagging indicator, right? Moving average is a slightly lagging indicator because it has to consider the moves that happened before. A 50 period moving average means that it needs to consider the 50 candles before that, before it puts a dot. 50 candles before that, before it puts another dot. 50 candles before that, before it puts another dot again. So that move, that 50 MA crossover is going to happen slightly later than everything else, because this crossover here would have to be considering the 50 moves or the 50 candles before that. But it builds that confidence, because what you could have been doing is you could have bought at that point, right? I'll clear out the charts just so that it's a bit easier to see. Right, so you can see that in this case here, we can be looking at price breaking above a moving average, one signal towards the upside, we can see that price is trading into that range, into that channel. Again, another signal towards upside. And we can see that price is above the Ichimoku Cloud. Again, another signal towards upside. So far, we've got breaking above a moving average. We have price within a channel, moving up into the channel. We have price above the Ichimoku Cloud. Three indicators there telling you it's moving up. Imagine if you bought at that point, your stop loss would be there. Your take profit could be at the next point there or into that channel there. And halfway through, you see a crossover, right? You see that golden cross. I know it is late, but it also gives you that you would have taken a profit there. It gives you the additional confidence that when price comes back down to test that support level again, you can anticipate that upward move, because in this case, again, it all sets up price is within or is rejecting that lower move, it's pushing upwards, it's crossed over, and we see that confluence to give us that confidence for price to move higher towards that next resistance level on the channel, right? I hope you've got any questions. If you have any questions, please feel free to ask. A couple of people just joined us, so you have missed a little bit of this session, but this is recorded, so you can always check back again. For those of you who have joined us, please feel free to ask any questions as we go through some of the top trend indicators that you can use to help you with your trades or your trading strategies. Right, and this is a summary. We can see that Confluence, as price breaks up, you have multiple scenarios. One here, breaking above that MA, price overall above the Ichimoku Cloud, testing that support level on the channel, and that golden cross there, pushing price towards the upside. So this confluence of indicators is very important especially for new traders, because it gives you that confidence on whether your analysis is right, whether you should hold on to a trade, or whether you should get into a trade. But what I would suggest is that try and limit it down to 2 strong indicators that you're comfortable with. Don't try for too many indicators to form a confluence, because what's likely to happen is that you're going to see, or you're going to be sitting there waiting for everything to line up before you get into a trade. And what's going to happen is that you could be missing out on many trades as you wait for all the indicators to line up. So look for 1 or 2, at the most 3 good indicators to line up, and indicators that you're confident with to line up before getting into a trade. You see very good results there, right? So with that, what I will do as well, we'll get into the charts and show you some possible trade ideas or some examples with these trend indicators that we've just discussed. Again, if you have any questions, please feel free to ask. Move this across. Take that away. Take that away. All right, here we go. So just check to make sure I've got the right screen up. Okay, so now we start looking at I'll do the simplest one first. I'll just show you how we use I'll show you how we use the channels to start off with. Okay, so I just fix up my charts a little bit. All right, so we start off with the Aussie dollar here on the H4 time frame. So I will always suggest look at it on H4 time frame first if you can. If not, try not to go below the H1 time frames, because that's just going to be too noisy in that case, in that scenario. All right, again, thank you all. So I got a couple more people joining us again. So if you have any questions, please feel free to ask. In this case, let's look at a channel. No, I'm coughing so badly. Where's my channel? There you go. All right, so we have here that move towards the downside. You can see that there's one example there, right? So that move since the 17th of June towards the downside, stretch that out there. So let me draw it a bit more accurately. You can see that we consider the tails towards the upside, and again there, close to that, and again there, that's the downward trend. And then you can see that as price comes, it supports or it respects those levels. And once it breaks out of that level, drag it across a little bit. Once it breaks out of that level, you can see that upward move on the Aussie dollar towards the upside. What I'll do is I'll also add in the, where is it? Where's my cloud? I can't find my Ichimoku Cloud here. All right, so I'll add in the 50 MA. That's my moving average there. Again, while I'm clicking away on this, if you have any questions, please feel free to ask. Oops, no, go away. Okay, so I can't seem to find my moving average. Okay, I'll just get into the, there you go. Make sure you got my Ichimoku Cloud there, right? So you can see that in this case, I want to show you that confluence towards the downside with the cloud, the red cloud forming down. You can see how price has always stayed below that red cloud. And once it breaks towards upside, you can see that it's still red, but the green is starting to form. So we're looking for price to continue towards the upside there on the Aussie dollar. And then I'll add in one more. The 50 and the 200 MA. You can see here, as the 50 crosses below that 200 MA towards the downside, we can see price tracking lower. Now in this, the 50 forming a bit of a resistance. You can see here price testing higher, tracking down, price testing that moving average level, testing down, testing that level, moving down again. So once it breaks out of this point, we're looking at a possible push towards the upside there. I'll give you another example. Any favorite pairs that you want me to look at in this case? If not, I'll look at one of my favorite there, the pound dollar. All right, so I'll clear it out just so that it's easier to see for you. You can see if we just looked at, just as we put it together, right? I'll put it together with you. We can see that crossover, that 50 and the 200 MA crossover, it's pushed towards the downside, but that's late, right? It happened actually here on the 10th of June. We saw that crossover only on the 14th. That's one of the reasons why I tell you that using a moving average indicator can be useful, but it's going to be slow, right? It can be useful, but it's going to be slow. What you can be looking at is as it breaks down, you can see once it starts to cross over, it gives you the additional confidence for that further downside to appear. At this point now, we can see that I'll put in the channel. All right, so I'll zoom out. Let me find the channel. In this case, I'll do one like that. I'm sure we have another one towards the upside as well. So I'll just do that one first. Oops, let me move this up. Okay, so there we have it. We have that test of this point here. Move this down a little bit. We have that move down, and then as it crosses down and breaks below this point, you can actually draw another, possibly draw another channel towards the downside. But I'm going to keep it a little bit simple now, just to show you the basic workings of the different trend indicators. We have the we have the downward channel, as you can see, price testing, breaking lower, passing back up into that channel, staying within the channel, resisting that level there, and several times towards the downside. Now, price is testing again this 1.20 level on the pound dollar on the H4 time frame. You can see that despite the red Ichimoku Cloud towards the downside, that green is forming. We're seeing the 50 MA starting to turn back a little bit or sit across a little bit. The downside seems to have stalled. So what you want to be looking for in this case is whether price is going to push up or whether it's going to turn back down again. What I would put in as well in this case is a moving average, and I'll change that. Oops. I'll change that moving average to a, can't change my moving average. Okay, so you can see that price has tested the moving average. I'll take that away actually. Let me remove that moving average because it doesn't help. I want it to be the 50 moving average actually, or the 46 actually. So yes. There we go. No, that's too many lines. Nope, start all over again. Okay, so in this case, let's do it all over again. I messed it up a little bit. We have the Ichimoku Cloud and that 50 to 200 MA, and then the channel that we had from back there. All right, so that's one way to look at the trend towards the downside. Drag that out a little bit again. Any questions so far? Anything else you want me to look at? If not, let's look at couple more pairs. I'll clear that one out. Okay, I like the US yen. What I'll do a bit differently here, I'll look at it on H1 time frame. Right, so in this case, you can see that upward channel. Let's see how that works. No, it's a terrible channel towards the upside. You can see that's not a great channel. Oops. You can see that move up. As we drag it back a little bit, you can see that price has tested, came down, supported that level, came close to the next resistance, tested, tried to break higher. I would move this up a little bit just so that it catches all the points, but then it becomes a little bit too wide. So looks like a bit of a fake breakout before now testing back in again. It makes a lot more sense when you add in the Ichimoku Cloud. You can see that price, I'll take this away just so that you can see the cloud easier, is that price trades above. Once it comes back in, it becomes a little bit choppy before pushing higher again. Right now, testing lower, coming close to that 137.50 level. Kiwi dollar on the daily time frame here, right? So you can see that once you have that channel, no, there's only 1 point there. Take that away. Can be looking at a possible move like that. All right, so we can be looking at quite a big range on the Kiwi dollar, possibly finding a strong support level at this 0.6081 or 82 level and bouncing towards the upside. We can see that pushing lower, and if I put in the 50 to 200, you can see that crossover there indicating that downward move. What we're looking for now is if price can push up above that 50 moving average, could we see further upside on the Kiwi dollar? That's going to be quite interesting there. And also, actually, I got a question there on the dollar index. So dollar index, we've seen a big downward move on the dollar index. Let's look at an H4 time frame first. A big downward move on the dollar index. We are seeing that formation of that red cloud forming. If price does continue lower, right now at 106, below 106.50, we're looking whether price can break lower. You can see that it's broken below. So once it comes down, it struggled to break lower. Once it broke below that 50 MA, we see that the downward move is quite strong. Right? And then now as it comes out, as it breaks out of that cloud, we're possibly going to see the dollar index track lower some more. So now if I add in the channel, zoom out, consider that points, those points there and there. Right, you can see that as it came close, it hit that. Let me see if I can move this down a little bit. You can see that it's found a support, and as we saw that break towards the upside, it tested that near-term resistance, came back down again, tested that support level, all the time staying above that MA before now breaking towards the downside. 106 will be a key level there, as we could see the dollar index come down, test that near-term support level or that channel support level. And if it breaks lower, then you're going to see that what we just shared with you, the double break, right? We're going to see possibly that 200 MA coming very close towards that. We're going to see the 200 MA coming very close towards that channel. You're going to see price come down towards the bottom of the channel. And if it does break, then we're going to see a very big downside on the dollar index if it comes down below that 106 level. So just something to watch out for. If we see this move up and we see price come down and break below, it's going to be exactly, almost exactly like that example I shared with you on the slides, the double break as it breaks below the channel and also below the the moving average towards the downside. So something to watch out for at this point here. Can the dollar index continue tracking lower? All right. Any other questions at this point? Let me have a look. All right. So far so good. Everyone's happy. Let me have a look at the next pair. Let's look at the euro dollar. So euro dollar was very interesting because it came all the way down, it shot down, tested that 1.00, the parity level. It broke below briefly before bouncing back up. Right now, broke above that 50 MA into that cloud. We're possibly going to see further upside on the euro dollar because the ECB is considering, is likely to increase rates by 25 basis point on Thursday. We're possibly looking, or they're discussing the possibility of a 50 basis point rate increase on Thursday. So that's actually with the ECB introducing the possibility of a rate of 50 basis point rate hike, we're seeing more hawkish move towards the upside, right? So because of that, you can see that the euro dollar has found good upside. And if I did put in a channel, let's go a very long, wide one, you can see that it's tested, bounced off. Move this down a little bit. All right, tested, bounced off, hit that resistance level, came down, came very close, turned down. We saw a cross, death cross there as well towards the downside. Tested below this, you can see you tested below this channel, that support level as well, bounced up. At this point right now, we're looking to see whether the euro dollar on the H4 time frame here, can it break higher? Can it go towards that 1.04 level, towards that recent or that top of the channel before turning back down? Or is it going to be resisted possibly by some interim support level here at that 103.86 level if it comes close towards that point, right? So we have a couple of interim support levels. I would say that's a whole area there between 103.40 and 103.86. We're likely to see price come up towards this point before deciding whether it's going to push towards upside, test that upper channel, right? We're going to see that, or we're going to see price come towards this point and then turn back down again. So something to watch out for those of you who are attending, who are watching us, possibly something to consider. This move towards the upside is possibly likely, especially, and we're going to see more volatility with the ECB rates decision on Thursday evening, 25 or 50 basis point increase. That's something that's going to see whether price test that resistance level or not. All right, so I'll be looking at one more chart. What else do you want me to look at? All right, gold. Someone said gold there. So clear out everything. All right, so gold again. Oh, we have the cloud. You can see that it's been pushing towards the downside. So a bit dissimilar to everything else. With every other pair that we've looked at or every other analysis we've done, we've seen a little bit of a green Ichimoku Cloud forming already. In this case, gold on the H4 time frame hasn't formed that green yet. It's really been sitting right across. It's really been sitting right across now, still below that 1716 resistance level. And in this case, if I zoomed out, you can see that putting in that channel. Pardon my coughing, it's just annoying as well. I wouldn't do that channel there, hang on. Let's put that there. No, that wouldn't work. Delete that. Towards that upside there. No, I wouldn't. I wouldn't do an H4 channel at this point unless you zoomed out and took the really wide range. In this case, something like that, right? So unless you took that big wide range, but it doesn't really fit with your analysis here, because that's right in the middle. We're going to see that sit right across, so it doesn't really fit. So you don't always have to apply all the different indicators, because what's likely to happen if you apply everything is you end up forcing the indicators to try and fit, which if it doesn't fit, don't use it, right? If it doesn't fit, don't use it. Use other indicators, something that could give you a better analysis or better interpretation of where the market is likely to head. In this case, we haven't seen a strong cross. We saw that cross there at the 1940 level towards the downside. And at this point now, you can see that price is sitting right across, coming very close towards that 50 MA? If it does break towards upside, or is it going to hit and turn back down, quite similar to what happened here on the 13th of July? It came very close before turning back down again. This is going to form this is going to form a good resistance level to keep price possibly towards the downside, possibly below that 1725 resistance level, or that cloud, that Ichimoku cloud there. All right, so let me see, do I have any questions? Anyone? If you're happy so far, give me a big thumbs up. Let me know if it's all good. Fantastic. Good stuff. So let me see, anything else to look at? We've done most of the major pairs. US CAD. US CAD was one of the ones that I was quite keen on. You can see that US CAD broke below that 50 MA, tracking lower. It's between that 50 and 200 now. I'll say be a bit careful. What you could be looking for is if the price continues trading lower. If we do see that price break below the 200, we could see further downside. You could also apply a channel in this case, working quite strongly. As it breaks out, comes back in, we can see possibly a break. And if it does break this way, you can see again the possibility of a double break. If that MA does come up and we see price break below, you can see a double break, which could lead to quite significant downside for the US CAD. All right, so went through the top 5 or the top indicators, trend indicators that you can use to give you a good idea of, what you can use to help you with your trades, to give you the possible trade ideas or trend ideas, or make trend a little bit easier to see, possible breakouts, possible reversals. Now, with that, we looked at some chart setups, right? I'm possibly going to pay quite clear or close attention to the US CAD. If it does trade lower, we could see the possibility of a significant downside. If it does break below that lower channel and that 200 MA, we could see that would be about 1.29. If it breaks below that point, we can see quite a good downside. I hope you had a good session. If you have any questions, please feel free to reach out, ask a question. If you are watching us on YouTube or any other platforms, leave it in the comments. I'm sure someone will be checking that and will be happy to get back to you on your questions and queries. With that, make sure you tune in, tune back, tune in for the next sessions as we go into guiding you with your trading and your overall trading strategies, helping you become a more profitable trader. With that said, I hope you had a good session. Take care, trade well, trade safe, and I'll see you again. Bye-bye now.